So here in the 1 hour time frame, we are heading towards Tuesday. So let's play price to see what happened. So now we are in Asia session, which now we can draw in the 15-minute time frame so that we can have a clear narrative of full movement narrative of that session. So we can see price have mitigated the zone, the daily rejection block zone. So let's play price to see. We're in Asia session. So let's see what happens. So now Asia session has ended. So we are looking forward now to the London session. So with this delivery, then this is the Asia session low, the Asia session high. So we're anticipating to see that London would take out the Asia session high point, and then we may frame what bearish movement of price to the downside. Since now what we can see is that the Asia session failed to give us an impulsive movement to the downside to take out this low point. So we have the Asia session low point still intact and the high point, and we are seeing price trading back to the upside. So it means that we would see price possibly seek the high before we have what's the bearish movement to the downside. So let's play price to see what happened. Okay, what we can see clearly here now is that the London session took out the Asia session high points. So London session took out Asia session high, and we can now clearly see that we have what a market structure shift to the downside. During what the London session, we have what a market structure shift to the downside. So you can now frame an entry zone here in the 15-minute time frame, or to better see the candle narrative, you can use the 30 minutes or you can go to the 1 hour time frame. So here in the 30-minute time frame, we can see here we have what the bearish order block before now price traded to the downside, taking out this low points. So you can see here in the 15-minute time frame, it is established in the 15-minute time frame that we have this market structure shifts. Or let's play price to have a full delivery of this candle first. So let's see what happened. All right, so we can see that now we have what a market structure shift. So let's check the 30-minute time frame. In the 30-minute time frame, we can see that price just swept this low point. But what we must understand is that price have mitigated the daily rejection block. So we have the high probability to expect what bearish continuation to the downside. So in the 4-hour time frame, what are we possibly going to see? Let's look at the 4-hour time frame, guys. So here in the 4-hour time frame, what you can clearly see, we have our candle model, which is a single candle order block model. Now price returned into the daily rejection block zone, and clearly we can see price seeks this buy side liquidity, volume failing to close above this. The volume of this bullish candle failed to close above this, and next we have what this bearish candle took out this high, and then we can see volume traded below to the downside, closing below the low of this candle that took out this other buy side liquidity. So what we can now see is that we have an engulfing candle also in the 4-hour time frame, and clearly then we have the open price of the bullish candle here in the 4-hour time frame. So this can be a level we have our entry for the sell continuation. But then let's look at that in the 1-hour time frame so that you can establish a clear order block. So here in the 1-hour time frame, we can clearly see that we have what's a market structure shift. Asia session price took out the Asia session high, displacement to the downside. What do we have here? A fair value gap in confluence to the bearish order block. So also then with this established, we can clearly take a short position. We have our entry here, and then we can set our stop loss above what the bearish order block. So you ask yourself, where's the next draw on liquidity? So clearly the next draw on liquidity is that we have this candle low points here. In extension, we also have this low points here. But then you basically aim for the next draw on liquidity. And this trade setup is 124.95. So we can see now we've established what our bearish reason to go bearish to the downside in the Euro USD. Looking at how price have mitigated now the daily point of interest. So back to the 15-minute time frame. Let's look at that in the 15-minute time frame. So we have our entry zone established. So you can decide to want to refine that in the 15-minute time frame. So we have here as our entry. You can also see in the 15-minute time frame, we have what? A fair value gap, bearish fair value gap resting here. And in the 15-minute time frame, looking at it here, we have a breaker block here. So we can decide to minimize the stop loss to be above the breaker block here. So this could be a risky one because price may come into this fair value gap. So we can decide to leave our stop loss here, or you can decide to leave it above the breaker block. So let's have that locked. So clearly this was the sell setup. So let's play price to see what happened. Okay, price just continued to the downside. All right, so we can see what happened is that price just continued first to the downside. You know, from the 15-minute time frame, I taught a lot about the trading model in the Smart Money Concept Trading Bible. So you can see here we have what? A liquidity run. Price candle volume closed above that. Now a displacement, price pullback, creating what? An inducement liquidity. So we can see how price came, seeing the inducement liquidity into the fair value gap. Let's look at that in the 1 hour time frame. So we can see in the 1 hour time frame the fair value gap we have in the 1 hour time frame. So we can see price return. London session is still on, mitigated that. So we're expecting to see price drop to the downside. Where's our draw on liquidity? This is our draw on liquidity. That will be your targets. So let's play price to see what happened. Awesome. So we can see how price traded to the downside into the targets. So we have price traded to the downside into the targets, bearish targets, and price further extended to the downside. So you know that when we had this market movement, I had this level. Let's look at that from the 4 hour time frame. I had this expectation that we want to see price gives us what? Bullish reason, because we identify this equal low points here. We had this equal low points here. So let's do it with this price movement so that we can see that. So we had this equal low points here. So I anticipated to see price would come to the downside into this unmitigated candle wick, and then we have what's bullish reason to the upside. What we can now see is that price traded to the downside. Let's look at that in the 15-minute time frame. We looked at what's the bearish reason. Price traded bearish to the downside, first seeking the buy side liquidity here and then traded bearish to the downside. Let's play that so that you can get to understand what I'm trying to point to you. So price came into the zone and now price falling to the downside. So let's see that. So I expected to see that what price was going to take this sell side liquidity and then give us what? A bullish reason to the upside. With that possibility that would see price now aim for the what's buy side liquidity. So I always emphasize this thing, trade zone to zone. So now price has traded into a daily zone, giving us a sell model. So clearly it means if you want to buy, the first target you must look at is what is the drawn liquidity to the upside. It is this fair value gap. So meaning you'll be buying then to the fair value gap rather than looking at price now seeking the buy side liquidity here. Because why? The market reacted at the daily rejection block level. Are we together, guys? So from this now here, we can decide to look at a reason to want to buy from this level into this fair value gap. So let's play price to see what happened. So price traded bearish to the downside. And now you can see how price returned to the upside into that fair value gap and now continued bearish to the downside that same Tuesday. So let's play price to see. So price continued bearish on Tuesday. So we had bearish established on Tuesday. And then I also showed us what we could expect on Wednesday. So you can see we have what? Bearish movement on Tuesday. So clearly the bearish movement was from this, and then I targeted this low point here. So on Wednesday now, looking at how Tuesday gave us an established bearish movement, I also told us to anticipate bearish continuation on Wednesday. And that is what we are going to look at. So let's do it with this so that we can now go to the daily time frame to look at the narrative from the daily time frame. Let's do it with this so that we don't have so much on the charts. Let's do it with this also, and also this. So back to our daily time frame where we would establish the daily bias for that particular day. So you would know that in the daily time frame, I told us that since we have price on Tuesday gave us strong bearishness to the downside, I told us to anticipate to see what price will continue bearish into the fair value gap And our next target will be to have bearishness to this candle week high and then the candle volume here, which is the open price of this bearish colored candle, because here we have price traded still respecting this key level and then bullishness breaking out of this consolidation. So I told us to anticipate more bearishness. And if you remember, I made emphasis to the fact that now we would see the possibility that price would return to the upside, mitigate this level, and then give us that bearish reason to the downside on Wednesday. So, and I also told us that we could now see price dip more higher. And we identified that from the 4-hour time frame. Let's check the 4-hour time frame. In the 4-hour time frame, what we saw, or what I pointed out to us, is the fact that we have this fair value gap. So I said price may trade into the fair value gap before we have what? The bearish reason to the downside. And first, I'll be looking forward to this level, and then in extension, the level lower here, because we identify a buying movement before a sell movement that took out the sell side liquidity. So this established now, let's go to 1-hour time frame. So what we can see in the 1-hour time frame is this. So we have the daily level we marked from the daily time frame. We can see that here in the 1-hour time frame, which is the bearish engulfing candle. So what we can see is price traded to the downside. We had this pullback reacting at this supply bearish movement. Price gave this pullback to the upside. What we can see is in confluence to the 4-hour fair value gap. We also have a fair value gap here in the 1-hour time frame and this unmitigated week. So preparing for Wednesday, we're to anticipate that bearish possibility. So our dealing range is from this high to this low point, which is Tuesday's high and then Tuesday's low points. So clearly now, looking at the premium level, you want to use your fib. So from the high here to the low here. So it means we have here as equilibrium level, and then we have our premium level above that. So what we can see is that the candle at equilibrium is unmitigated here, which is, and it's also having a fair value gap, because here we have a buy movement before a sell movement to the downside. So clearly it means to have a sell possibilities, you're looking at the equilibrium and also the premium zone. But then, I always tell you guys this, that there are moments price will not trade into premium or discounts or even the equilibrium, and then price continues its movements. So that is where also trading session and understanding timing is very important. So let's check the 15-minute time frame. So here in the 15-minute time frame, we just know that we have the engulfing candle. That is the open price of the bullish candle in the daily time frame. Let's look at that. So here in the daily time frame, we can see that the open price of the bullish candle. So we're anticipating the possibility of a retest and then continuation bearish to the downside to the drawn liquidity resting here. So from the 1-hour time frame, what we can see in the 1-hour time frame in respect to that level is a fair value gap, which also we can now see that we have this unmitigated candle weak. So you can decide to take a risky entry here, where you have your entry above that level, which is basically looking at this candle week. So we can decide to have an entry there and then stop loss above the week. So, and you are not doing this immediately, but you've established that zone. So what you now need to do is to wait now to look at how the Asia session will deliver. So how the Asia session delivers will help you to confirm if you're going to work with that level. So that was why in the free Telegram community, I said I had a short sell movement in anticipation for the second sell movement. And the second sell movement was not activated. So let's play price to see what happened. So we can see now prices trading. So let's anticipate the Asia session. So now we can see we are in the Asia session. So what happened is this: price traded to the downside, a pullback, and then Asia session fell. So clearly now we have what? Asia session high. So we can clearly just work with this candle high points here. So we have liquidity resting here. And now this is that daily level. So establishing that we now have this high point as a draw on liquidity, and that serves as the Asia session high points, since we're expecting bearish continuation, and then we have a daily level here. So what I waited for was to see how price was going to react from the daily level. So with this established, you could have that possibility of setting your order. You could have your pending order here, and then look forward to have your stop loss above this candle week here. And then you'll be targeting to see how price trade to the Asia session low points. Looking forward to see price will seek the Asia session low points. And this is 1 to 5 0.05 risk reward ratio trade setup. But anyway, I didn't set a pending order. I had to wait to see what the confirmation was going to be here. So let's play price to see what happened. So we had price trading back to the upside, still the Asia session. So clearly, I told you I targeted the Asia session low point. So this is the low point. And this is what 127.33 trade setup. So let's look at how price delivered. So we can see price traded, but then price did not return to this level yet. So let's see what happened next. Okay, now you can see price traded to the upside, activated that, and then dropped to the downside. Mind you, I told you guys I did not take this one here, a pending order here. So I waited to receive a confirmation, and this is clearly the confirmation, guys. So during the London session was this. So we had price traded taking out the Asia session high, and now price reacted from the daily level. So what we can see is that price took out what buy side liquidity here, buy side liquidity here, and we have a single candle order block. Clearly, what do you see? Price closed below this candle low point. After seeking this buy side, price closed below this. So clearly now I had my entry here. The short position was at the open price of the bullish candle, and then my stop loss was above this high point. So the stop loss was above this high, and then what happened? Targeted the Asia session low points, which is to see price seek the Asia session low. So let's look at that. This is it. And that trade was, I think, 1 to 10. So we had that movement of price to the downside, seeking what? The Asia session low points. So this was the setup on Wednesday. So it was just a quick one, because now I was looking forward to see the possibility that price would return to the 4-hour fair value gap. And then also in the 4-hour time frame, I framed the trade expectation or trade setup, looking forward to see that price was going to return into this level, because this is an unmitigated week. So I had this level here, and then I had the entry short position here. I had a short position entry here. I think the stop loss was above this candle high here. So I had the stop loss there. Then looking forward to see that price was going to trade bearish to the downside. First was to this level. So that was where I had the target, to that level. So let's get to the 1-hour time frame. So in the 1-hour time frame, you can see it's in respect to where we had the buy movement before the sell movement to the downside. So anyway, price came to the upside, but price did not activate this particular trade setup, as you can see that displayed in the screen. So let's play price to see what happened. So what we can see was towards the New York session now. So you can see price came but did not activate that, and then price continued bearish, and then now we are in the new day. And in the new day, that was when now price traded first to the downside before returning back to the upside. So that is just all I want to show you guys. I don't really want this video to be so lengthy looking at the trade review. So cheers and God bless you all.